Afternoon and good evening to all. Myself Vaibhav. In today's session, the non-farm payroll data from the United States is the market mover. Most of the financial instruments were in consolidation phase in leading up to the non-farm payroll release, which actually disappointed on the consensus estimate of more than 750,000 job additions, as only 235,000 job additions have been reported. This sent the US dollar plummeting, which anyway has been in bearish trajectory in last couple of sessions. This low non-farm payroll report is likely to pull the US dollar even lower, with my expectations of USD JPY dipping towards 109 in coming days. The surge in COVID infections is impacting the job market again as the prospective employers and employees both turning cautious with rising uncertainty in marketplace. This has contributed to the unemployment rate declining to 5.2% in the month of August from 5.4% in prior month, with the combination of job additions coupled with workers resisting to actively look for job, reducing the labor pool. The unemployment rate has now reached the lowest level since March 2020 on back of cumulative gains in last couple of quarters, even though new job additions are at also 7-month low in the month of August. Another important economic data point for the United States was the release of ISM Non-Manufacturing Purchasing Managers Index, which too has declined in August. It is now at 61.7 compared to the 64.1 in the month of July. Moderation is being seen in pace of expansion of business activity, new orders, and employment. We will also consider the loan data point which we got for the euro area earlier in the day. The euro area retail sales declined to 0.3% in terms of month-on-month in the month of July, contrary to the expectations of modest rise of at least around 0.5%. Though it still remains up 3.1% in terms of year-on-year because of the low base effect of pandemic ravaged economy of last year of 2020. Now let's see what's happening on the technical front. We will consider the outlook first for the USD JPY. Afterwards, we will also consider the trading opportunities in gold, which is on the cusp of a important breakout. It has reached its recent swing highs, and it looks likely this time around it might finally make a jump on the higher side. So we will be looking to trade and profit from these opportunities. Let's start the technical segment with the technical outlook for USD JPY first. This is the daily time frame chart, and as you can observe, we have seen the USD JPY consolidate in a narrow range of around 100 pips. The lower side, it has found support consistently around 109.4 on the higher side. The 110.4 has been its upper side output band, and within this range it has spent almost 2 weeks. This might change soon, and not this week, but of course probably speaking next week looks like we will have a breakout of sort on the lower side given its price reaction of today's non-farm payroll report. After that, it has dipped considerably from the levels close to 110 and now inching towards 109.6. So, given this bearish impact of the non-farm payroll data report, I'm expecting it to correct towards this immediate swing low of around 109. So that is the possibility which we will try to exploit in coming days. And today, though we can't really place the new trades, we will be looking to pinpoint what are the important levels which we can keep in mind, and as and when we see the price action evolving closer to these levels, then we can take our chances. If we consider the lower time frame charting, here we have the central pivot point around 109.8 and it now stands broken. We have this fresh breakout on the lower side on back of this significant slide in USD GPY in today's session. We started the week firmly on the higher side and in Monday's session. Not Monday, on the 1st of September, we had seen significant gains, but those gains have proven short-lived, and now here we are looking for the short sale trades in the USD JPY with the possibility of it dipping toward the first support of this month's pivot point series. And as I said earlier, also today is not the day to initiate the new trades now. Once we have already seen these sharp moves, I think price action is likely to remain muted in remaining hours of the day. But rather than taking new trades and holding on to them on this weekend, it will be better if we simply figure out the levels, and then whenever we come back for trading on Monday, we can decide to initiate the trade. As long as the price action is below this central pivot point, which is now likely to act as a major resistance, I feel we can continue to look for shorting opportunities. And if you consider the regression curve, the price action has now moved in the lower band. And if we consider its inclination, it has been slightly bullish because of this formation of higher highs and higher lows in last couple of weeks. But now this time around, if we get the new swing low below prior swing low, then that picture also changes. And here we have the price action below the important marker of central pivot point. So taken together, these factors are pointing to the possibility of extended decline in the USD JPY, and all we need to do is try to optimize the entry and exit. For that, we can keep in mind these consolidation phase lows and highs. We had the consolidation phase highs of yesterday's session around 110.10. And if we consider the SMA formation, we have these three SMAs converging closer to 110. And this can be considered as an important marker, and along with the central pivot point, which is also around the similar price area, we can utilize this as the resistance zone. As long as we don't really have any breakout of sort on the higher side, we can be quite firm in our belief of the continuation of this bearish move in the USD JPY. So for optimizing the entry, we will have to of course look to initiate the trade as close as possible to this convergence area of these three SMS. So I think the price band of around 109.8 or thereabout is quite a good deal, and we can keep the stop loss just little above this immediate swing high. The day's high should be good enough, so that is going to entail the risk of around 25-30 pips. And on the lower side, we are targeting the move towards 109, so that is going to get us a risk reward ratio of even better than 1 is to 2. Now let's see what's happening in the gold. Gold is seeing newfound bullish momentum, and it has been helped by the fundamental factors such as the weaker non-farm payroll report, and that has contributed to some safe bets being piled on, and gold has gained in the process. We have the gold now climbing and almost close to the immediate swing lows. These were swing highs, and these were the price moves, price range from which it had declined last time around. So it will be interesting to see how it reacts. It has consolidated for last couple of days after having climbed to this price level couple of days back. In the last week, it got here, but after that, it has spent the last few sessions consolidating within this narrow range below this immediate swing high. And if we do have the new break above this, then I think that is going to change the picture for gold in significant way. We will have a lot more reasons to believe in the continuous upward momentum, and we can even bet on the possible move towards this immediate swing high, the prior swing high, little above the price levels of US dollar 1,900. So that possibility is there, which can bring us around 4 to 5 percentage point gains, and we even if we don't really go for swing trades, even in short term, I think we can adapt the buy on dip strategy, and that is likely to prove profitable provided our expectations uh, hold and we have the optimum entry and exit points, and even if we go wrong, we shouldn't be losing too much money. So we have this consolidation phase in which the gold traded in a narrow range, holding above the price levels of US dollar 1,800, and that is going to be the important marker for our trade positioning in coming sessions also. As long as we have the price action above the important level of US dollar 1,800 per ounce, we can be fairly confident in our outlook of continuation of bullish momentum in gold. We do have this formation of higher highs and higher lows, and if we do get the breakout above the swing high on the daily time frame, which we had seen earlier, then we will have many more market participants feeling the confident and getting involved for the new trade and a move toward these month's first resistance of this month's pivot point series can be expected. If we consider the regression curve has also inclined on the higher side after this consolidation phase. Now, if we look at the price formation, which is going to optimize our trade setup, then I think we will have to rely on these three SMAs, the 50, 100, and 200 SMAs, which are converging closer to the price range of around US dollar 1,810. So we can utilize these swing highs of last couple of days, and we can continue to look for trading opportunities whenever we have the correction. Some sort of correction is going to be required for new entry after having seen this sharp move of around close to 1 percentage point, not exactly 1%, but close to 1 percentage point. And if we get some consolidation in Monday's session, and after that, we can think about getting involved for a new buy trade while keeping the stop loss little below this immediate swing low. So any buy trade will have to be taken with the stop loss being kept closer to these prior swing lows or little below these 200 SMA line, and entry can be considered in this price band of around US dollar 1,820, and that is going to get us excellent risk reward ratio also, as we are eyeing on the possible move towards 1,900. So even if we don't really wait that long, I think the risk reward ratio of 1 is to 2 should be good enough for taking the risk, and we can take our chances and rely on this continuity in the bullish trajectory of the gold. So that's my take looking at the current price formation of the gold. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. For further coverage of the market developments, you can check out the Ducoscopy Analytics page. The JForex platform offers you a low cost environment to trade, so do check it out and start trading. We are also available on the Facebook. You can reach out to us there. Thank you all for joining in. Have a fabulous time ahead. See you next time. Till then, goodbye.